Guys, welcome back to the channel, Keith at Crypto Bullseye. So in this video, I'm going to be going over all of your altcoin requests. We're going to be going over the macro, we're going to be going over the fundamentals, and we're going to be talking about news events that are happening in the background, which is creating uncertainty in the market, which is creating volatility in the market. And don't forget, guys, what we're in is a high risk speculative asset. So we go from on risk into off risk and off risk into on risk during different times, different market conditions. So when the markets are on risk, what happens, guys? Interest rates are low. What happens when interest rates are low? Things are cheaper to borrow. You can borrow more money at lower interest. Your mortgage would come down because you can refinance your mortgage at a lower interest rate. This is creating stimulus in the economy, and that's before the money printer comes on. So firstly, interest rates come down. People have got more money. On the back of that, people can lend more money. If people lend more money, that can create stimulus in the market. Money printer goes on, that creates more stimulus in the market. Guys, it happens time and time again during different parts of the cycle. Now, the bigger picture, we're going to be talking about different nations having a standoff at the moment. It's not just tariff wars, it's interest rates. So what happens, guys? You've got interest rates that come down. That creates stimulus. That creates more money in people's pockets to spend on things that they wouldn't normally spend on. And when they've got spare capital, they will go on risk into the market, guys. The next thing we're talking about is debasement of currency. So you think when the money printer goes on, they're debasing their currency by X amount, depending on how much they stimulate the economy, depending on how much money they print. Now, who is going to print money first? Because we're going to be talking about the pegs between different currencies. And if you think Forex, guys, if you think, for an example, the Japanese yen against the US dollar, if the Japanese stimulate their economy so far and so hard, and the US don't stimulate the economy at the same time, it creates an imbalance and it creates a depeg. As the Japanese yen comes down in value and the US holds its value because they haven't stimulated their economy, they haven't printed new money, and they haven't debased their currency. So the world, to a certain extent, within the same period of time, needs to debase their currencies, and then that creates a level pegging between their pairs. So this needs to happen, guys, but there's a standoff at the moment. We've got tariff wars, we've got interest rate indecision. Let it play out in the background, guys. Let the volatility play out. If there's dips to buy the dips. The market still looks fine to me, and that's what I'm going to show you in this video. So let's dive in. Right, crypto market looking pretty crap today, guys. You can see we're down between 5 and 10% on the day. After Black Monday, this is the weekly, after Black Monday, everything got battered. We're down between 20 and 30% on average as far as the altcoins are concerned. Bitcoin got battered, everything got battered, stock markets got battered, and there's uncertainty and there's indecision as far as the world's concerned because of tariff wars, because of interest rates, because the world needs to refinance their debt. Their world needs to refinance their debt soon. Before they can do that, they need to think about certain metrics. They need to think about debasement of currency, what impact that'll have on their currency, whether other countries are doing this at the same time. And that's why you get, like I say, guys, your bull runs. So things are looking crap at the moment, guys. We've got indecision at the market, and Bitcoin's come all the way down to 76,000. Now, you look at this chart, what's happening? Still putting in higher highs, still putting in higher lows, still putting in higher highs, still putting in higher lows. Haven't even come back to test this area yet, guys, or just about come back to test this area. When is the bull market invalidated, guys? The bull market is invalidated when a higher low doesn't become a higher low, i.e., you take out the previous higher low, you close below the previous higher low, then you can expect a lower high and a continuation to the downside. That's when you get these patterns here, guys, head and shoulders, left shoulder, head, right shoulder. Right shoulder is showing one thing, guys. It's showing you can't put in a higher high. You're starting to move to the downside. Once you break your neckline, there's an acceleration. That's why that's a reversal pattern. Does it look likely to happen? It definitely doesn't look likely to happen, guys. It looks more likely that we're going to get a pullback and another leg up to the upside. That's what I'm expecting on Bitcoin, guys. But we don't just look at Bitcoin, we look at the collective market. So there's a few metrics that we're going to be looking at. Firstly, we're going to be looking at the fear and greed. So we've come back down now into extreme fear. What happens? You can see the Bitcoin chart down here, guys. The fear and greed is represented by this blue line here, this blue mark here. The Bitcoin chart is represented by the orange one. Every time we're in extreme fear, every time we're in extreme fear, every time we're in extreme fear, the Bitcoin chart goes up, the Bitcoin chart goes up. You can see that here, guys, because I've marked it out on the chart. These boxes represent extreme fear, extreme fear, extreme fear, extreme fear, extreme fear. I've marked it out on the chart, guys. Now, you tell me when this hasn't happened, when this hasn't happened. You tell me when this hasn't happened, move to the upside, move to the upside. So we're in extreme fear now. What is the chances for the first time that that's just going to go down, bam, bear market? What is the chances of that, guys? When we're in a time now where the world is trying to refinance their debt, trying to stimulate the economy, put new money in the market. Why do they need to put new money in the market anyway, guys? The world is an aging economy. The world is an aging economy. The world is a growing economy. We need to consistently increase GDP. To increase GDP, you need one thing: you need manpower. Also, you need technology. So manpower is getting replaced by technology, and that's going to be the next thing that drives GDP, guys. So the next thing that drives GDP is probably going to be AI, it's going to be advanced technology, and it's going to be increased productivity. Because if you think how long a robot can work, guys, 24 hours a day, how long can a person work? 7, 8 hours a day. So you think about the productivity advancement as far as the robots are concerned. When we start getting AI, when we start getting enhanced productivity, that will increase GDP ultimately. But in the short term, guys, we need to increase GDP. And if the stock markets are coming down, that's decreasing GDP for world nations. For nations. And if it's decreasing GDP for nations, that's showing one thing, showing that the economy is weakening. So they need to prop up the markets, and that's why they create new money. We're a debt-based economy, so they need to create new money. And on the back of that new money, what happens? It goes into the economy, it goes into the markets, it props up the stock markets. GDP looks fine and rosy, but all they're doing, guys, is just putting a plaster on it and putting a plaster on it and putting a plaster on it. So at one time, the thing's going to pop, guys. That's why Bitcoin is such a good thing, and that's why Bitcoin's taken off, because that's a hedge against all of this money printing. It's only 21 million Bitcoin, so Bitcoin's deflationary. Guess what? Fiat currency, guys, is the most inflationary thing ever. And when they put up interest rates, when they do that kind of thing, guys, when they're putting up interest rates, when they're printing money, any money that you've got is going to be debased. It's going to be worth less. It's like coin clipping in the Roman times, guys. So it's a clever way of stealing from you, basically, without it looking like it's not stealing from you. So basically, I digress there, guys. I'm expecting another leg up. That's in extreme fear. Why should it be any different to any other market? This is the weekly chart. It could take a few weeks to play out. We've got a couple of things in the background that we're going to be talking about very soon. Next thing, guys, exactly the same, guys. When is this invalidated? It's invalidated when we take out the higher low, guys. How far is it to the higher low? From where price action is now, 35% to the downside. So collectively, if the whole of the crypto market dropped 35% to the downside outside of Bitcoin, outside of Ethereum, and then close below there, then that's when we need to panic. Don't need to panic yet, guys. We are still in trend. So I'm expecting another leg up. This is my metric for exiting the crypto market. Everybody knows that once we get a break and once we get a close of 1.14 trillion, that's when I'm going to be scaling out and distributing my positions from the crypto market. It's taken a long time, guys. It's a couple of months late, but obviously we've got things going on in the background as far as Mr. Trump's concerned, trying to retake the way that people use tariffs and how to deal with the United States going forward. So the next thing we're going to look at is the Bitcoin dominance. And this is the interesting thing, because this wedge has lasted for 2017. This wedge has lasted for 8 years. So we've been in this trading pattern for 8 years. It hasn't broken out to the upside, hasn't broken to the downside, and it is currently rejecting. So if we just zoom in here, you'll see we've got a double top. This channel, ascending channel, has been a channel that's lasted 2.5, 3 years. And this thing is really wedging, it's squeezing to the upside, and it is getting so weak now. And it's looking like we're about to get a double top here. We're about to get a double top. Now, in the short term, if we get, in the next week, a candle that does this, comes down, a red candle, that takes out the open of the previous candle and closes below there, guys, that is a 3-bar reversal. If we get a 3-bar reversal there, then we've got a chance of coming down. Once we get the big surge to the downside, guys, this is the big alt season that people are waiting for. However, how can we have an alt season, and how can we have a rotation of capital out of Bitcoin, out of stable coins? How can we get new money into crypto to create that alt season and to increase the market cap of crypto as a whole? for us to get that surge to the downside of Bitcoin dominance. How do we do that, guys? World needs to refinance their debt. The world needs to stimulate their economy. We need confidence. We don't need uncertainty, which is what we've got now. We need confidence in the market that is going to happen. It is playing out, guys. It's playing out. One thing that we can see is the dollar. Now, this is a strange thing because we've had a weakening dollar. It is good for a weak dollar. Mr. Trump wants a weak dollar. If you've got a weak dollar, that means that exports from the United States can be cheaper because our currency is stronger. And if our currency is stronger, that means that we can export from the United States at a cheaper price because their dollar's cheaper. So you can see that this is coming down. It's coming down to a major support now of 100. If we break and close below this 100, that will signal one thing, guys. Big change in sentiment from off risk into on risk. So that's the Dixie, guys. And the next thing is the USTD dominance. Now, this is strange because if you look at the Dixie here, guys, you look at the Dixie, 618, what have we had here? We've had a rejection at the 618 here. Then we've had a big pullback all the way down to 100 on the Dixie. Now, the USDT dominance, look what's happened, guys. It has broke straight through the 61.8% retracement. And we're looking like we're going to double top here. If we double top here, then this will create a sale of USDT into other assets. What they're selling it, not selling it into pounds, not selling it into actual dollars, guys. People are selling it into cryptocurrencies. So that creates a weakness in the USDT dominance because the dominance of those cryptos that they're spending their USDT on increases the crypto market and reduces the average of the USDT dominance. Next thing is going to be the others against BTC. Now, this is something that's worrying because this trend has held for such a long time. This trend goes all the way back to 2015, and it's the first time that this trend has been broken to the downside. And this is the whole of the crypto market outside of the top 10, i.e. the blue chips, collectively trading against BTC. So you can see that we're getting weakness there. What we need is a pop up to the upside. We need to regain this trend. Once that happens, you get a big move like this, guys, big move like this. People coming out of Bitcoin, people going into stable coins. Why aren't they doing it now? Because they want to be in the least risk asset, which is Bitcoin. Why are they in the least risk asset? Because there's uncertainty going on from a macro perspective. Next thing we're going to look at is Ethereum. Ethereum's come down to a strong support. Ethereum's actually on sale now. Ethereum's $1,447. It's actually under $1,500. And it's at a strong support now, guys. If we close below 1,460, next support's all the way down here, 1,107. If anyone can get in at 1,107, absolute bargain. Is it going to happen, guys? ETH at 1,448 looks an absolute bargain to me. It's not financial advice. This is the next thing we're looking at, guys, the BTC season and the Ethereum season. You can see during BTC season, what happens? Ethereum bleeds against its Bitcoin pair. During ETH season, ETH starts running against its Bitcoin pair. And then we've had the BTC season. We've got this wedge pattern here, guys. This wedge pattern is so bullish. Even though it looks bearish, it is so bullish. Once we get a break from this wedge pattern, then that is potentially the start of ETH season. Within ETH season, we get alt season. Why do we get alt season within ETH season, guys? Because this is the least risky asset in crypto. This is the second least risky asset in crypto. So Ethereum is the next least risk asset, guys. So the rotation of capital, if there's a little bit of uncertainty, goes from Bitcoin into Ethereum. That's why we get ETH season. Within ETH season, the rotation of capital comes out of Ethereum into higher risk assets and higher risk assets until literally all the retail come in. They want the degen stuff. They want the meme coins. They want the things that the thing's going to do 100, 200, 300, 500x. And then that's what happens within the ETH season is you get the alt season. So it's important to monitor that. Next thing we're going to look at is the VIX. This is the volatility between the S&P, within the S&P. Why do we look at this, guys? Because when we've got a weak S&P, that's the traditional market. These markets, compared to cryptocurrencies, guys, cryptocurrency is small fry compared to these traditional markets as far as liquidity is concerned. So if the S&P falls back, the S&P is an off-risk asset. If the S&P falls back, crypto takes a beating. Bitcoin's held up, guys, but crypto, like Ethereum, takes a beating because that is so much more on risk than what an S&P indices is. So when you get weak traditional markets, you get weak cryptocurrency. And that's people flooding into other on-risk assets, things like off-risk assets, sorry, things like gold. Usually the dollar, but we can see from the Dixie, they're not flooding the dollar at the moment. They're coming out of the dollar because the dollar's weakening. So I want to ask you the question, where is the liquidity going? So we've seen the crypto fear and greed index, extreme fear. We know exactly what happens every time the market's in extreme fear. Bitcoin gets a pump. So that's positive, although it looks negative. It's positive. We need to wait until what happens this week, as far as news is concerned, to play out and to see what kind of sentiment we get going into next week before we can make any major decisions. But from an investment perspective, guys, DCA in at extreme fear, it's one of the best things you can possibly do. Right, the next thing. Japan's stock market is crashing, and Japan's Ministry of Finance and other agencies are holding a three-way meeting. This could be liquidity injecting plan to stabilize the market. Look what they're talking about, guys. They're talking about financial and international capital markets. So they're going to be doing something. Are they going to be stimulating the economy? What are they going to be doing? Will they liquidate, or will they inject liquidity into the market and stabilize their markets? That's the first thing. The second thing, Raoul Pal, the genius. This feels like 2018 for those that were around. Powell signaled a pivot. I think we get the same, plus a trade resolution with China. Risks in stocks feel like 10% downside max versus 15% upside in the next 2 weeks, 25% upside in a month or two, and much more in 6 months. So as Raoul Pal says, the cowbell's come in. When is the cowbell going to come? Right. Next thing, just in, President Trump says countries are kissing my ass to make new trade deals. That's what he wants, guys. He wants new trade deals. He wants people to go to him. He wants people to kiss his ass, kiss him harder, kiss him faster, and let's get on with him. Make the man blush. That's what I say, guys. Then the next thing, look at this, guys. It's all playing out from a macro perspective. These people are all holding talks in the background to find out exactly when they're going to stimulate the economy. They're not just holding talks with their own governments, guys. They're holding talks internationally. They all need to do it together. So, holy shit, tariffs on China officially set at 104%. This is a huge middle finger. So, China's basically playing hardball at the moment, guys. China's playing hardball against the US, and that's going to be the biggest clash that needs to be sorted. Like Raoul said, he thinks that they're going to get a deal. He thinks they'll get a trade resolution with China. So that is a big middle finger from China. China's playing hardball now. What about positivity? Crypto space is packed with positivity, partnerships, and appointments. Markets haven't even heated up yet, and this is breaking news. Pakistan appoints Binance founder CZ as strategic advisor on crypto. So we are getting the positive news, guys. And the next thing, Mr. Crypto, not a single top indicator has hit yet. We will rally hard in Q2. So he's expecting it a lot sooner. And these are the indicators, the top indicators that haven't even been hit yet. So from the market perspective, guys, things are looking fine. Things are looking fine, but there's uncertainty and there's volatility. That's expected with the things that are going on. Right, okay, altcoin requests. So firstly, Arbitrum. Looking at Arbitrum, one thing you can look at is this big weekly bullish divergence. You can see when you zoom in on the RSI, put in a big higher low. Put in a big higher low on the RSI. What's happened here? Put in a lower low. That's created an imbalance, and that's created a higher time frame imbalance. So I'm expecting a push up from Arbitrum, and this resistance level at 47 cents or 48 cents, I think it's going to crash straight through that resistance level all the way up to the next resistance, which is all the way at $1.15 to $1.17. So that's what I'm expecting on Arbitrum. Arbitrum looks pretty good, guys. Fundamentally, you've got this big bullish divergence. We talk about on Bitcoin, this big bearish divergence you've seen here that I talked about. So where you're putting in a higher high, and then on the RSI, you're putting in a lower high. This is completely the opposite on Arbitrum, where you're putting in a lower low and you're putting in a higher low on the RSI. So that's creating a major imbalance, and that looks pretty good to me. Arbitrum sitting at 26 cents. Next one's going to be crypto.com. We've got support sitting at 73 cents on crypto.com. Where do you need to worry? When you come below not 76 cents. We've got support at 0.073 cents. So you need to worry below 0.073 cents on here. If you get a break and a close, expect to come all the way down to 0.05 cents. However, we're holding this. It is strong support. It is the weekly. Your next resistance point on crypto.com is 15 cents. You can see one thing here, guys. We're getting an uptick on the stochastic RSI. So it is positive. We're coming from an oversold region and we're popping up above the 20 level. That's showing positivity, guys. However, that's a lagging indicator. So just watch how this plays out over the next few days. Expect it to just hold support for the next few days whilst we get everything in the market this week out of the way. Once we get the news events out of the way, once we get the tariffs out of the way, once we get trade deals going on, then we can start seeing some movement. So you've got VET next, guys. We've got a little bit of movement to the downside on VET. This potentially could come all the way down to 16% of the downside, which is 0.01642. So 0.01642, and then the bottom of the range is 0.014. You've got your resistance sat up here on VET, resistance, 0.32 to 0.34. What is that from where price action is now? From where price action is now, that is a 62% move to the upside. If you can come back and get this at a lower level down here, that creates a better entry, creates lower risk, and it creates higher reward. Just an example, put your risk to reward tool on there, guys. So if you go into the next level of resistance, where's your stop loss? Stop loss goes below the previous low. What happens if you take it here? More risk, less reward. What happens if you wait? More reward, less risk. So it is about risk to reward, guys. I would wait on that one. Exactly the same for this, guys. Polyswarm at the moment. These are just chart requests, guys. I've not recommended any of these. This one looks like it's a high risk one, and this one's got a little bit of movement to the downside. I'd want to see this come all the way back down, 18%, all the way to 0.01. 0.01 to 0.012. You've got your next resistance level sat all the way up here. If you do get a support buy on that, is 152% to the upside, just to this resistance level here. We're not talking about bull market projections. We're not talking about alt season projections. We're talking about small time moves here, as far as an accumulative perspective is concerned. We've got Jasmy Coin next. Jasmy Coin's looking like it's hitting a strong support now. How do we know this is strong support? Because this area here, that acts as a support. What happens when you break down, guys? Resistance, resistance, resistance. Then once you flip through, you create a new support zone, We drop that, so this is our final support. If you drop this level here, expect to go all the way down to 0.003. However, it is holding at the moment as far as accumulation is concerned. Accumulating small amounts, and then if it drops, small amounts to average your position down somewhere in the middle. Makes sense to me. Just an example, guys, if I've got $1,000 in a portfolio, how much would I put in this? $25, $25, $25, maximum probably 3 times, guys, maximum 4 times potentially. So that's how I'd be playing that, guys. Would I be trading it? Would I be leveraging it? No, because we've got too much uncertainty in the market. When you've got uncertainty in the market, guys, a market reset is coming. Before you get a start of a new alt season, the start of a new bull market, you get that market reset. Why do you need a market reset? Because it flushes out the weak hands. Why do you need to flush out the weak hands? Because you need people to hold for prices to go up. And for prices to go up, people need to have conviction that the thing that they're in is going to go up. So they need sentiment to be positive. That's why the people that are new to crypto that sell at low levels, guys, they're the weak hands, and they're the ones that institutions buy from. They're the ones that the big boys buy from. And that's why they drive the market down to get those out, reset the market, get rid of the leverage from the upside, get rid of the leverage from the downside, have that condition in the market to be able to have the reset for it to have a bull run. So there's lots of bigger pictures at play, guys. This is holding support at the moment. If you can get this anywhere between 0.0073 to 0.0087, that looks good to me. You've got resistance sat up here at 0.015 to 0.0165, which is an increase from where support is now to 70% to the upside. So really, this thing needs to break this resistance level. Once it breaks this resistance level, just get this on. Once it breaks this resistance level, comes back down, tests this support, guys, then that looks good to me, because when you put a risk to reward tool on from here, look at the gap. There's your risk. There's your reward, 7.16. That looks a lot better than what it does here, guys, because we've just dropped this level of support. A little bounce to the upside, that's likely, but are we going to reject? Because that's resistance. And it's exactly the same level, this resistance level, as this support buy here. So a support buy, guys, that means that the bulls have got momentum. Resistance means that the bears have got momentum. So if you've got patience, you can wait, you can get it at exactly the same level, but a much high probability of that playing out. So next thing is going to be ICP. We've got bear market low sat here at $2.72. The reason why I'm saying that, guys, is because we've just dropped this support level. This support level sat at $5. If we cannot get back into this support within the next few days, this is going to act as resistance. If it acts as resistance, potentially you're coming back down to test your bear market low. So I don't like the look of ICP at the moment, guys. Would I accumulate there? No. I want to wait to see if we get back in a trend. Would I accumulate here? Yes. If it come back down to this level, definitely. So that's ICP, guys. We've got a lot of wiggle room on ICP. We've got a lot of areas to break through as far as resistance is concerned. But once we break through those levels, there's a big gap that would create a huge surge of opportunity that we're not even going to be talking about in this video. So we need to see how alt season plays out. We need to see how fast it takes before we get a break and a close of total 3. And then we can monitor exactly how high crypto can go. Because I get lots of calls, guys. I could say, how high do you think this is going to go? How high do you think this is going to go? I can use Fibonacci extension tools, guys, but I can't just guess how high something's going to go. Don't ask me how high something's going to go. I haven't got a clue. Haven't got a clue, guys. We could just look and we can analyze. Take what the market gives you. So the next one, Polygon, guys, Polygon. Now this is a strange one because obviously this is converted to Matic. You've got a big spike to the upside, then we've got a pullback, and we've created a little bit of a range here. We dropped through the range. Have we got a support base, and have we made a support base? It's too early to tell yet, guys. So what we want to look for is this candle going to hold? Is the next candle going to hold? Is the next candle going to hold? If it does, it's going to create a new support base, and that's going to be our area of support. It's too early yet. It could come down further. We don't know. So that doesn't look any good to me, guys. One thing that you can do is stick a simple trend line on there. That's going to be your momentum line. Once you get a break of that, that's showing that the bulls have got momentum. Then you can protect yourself below the previous low. At the moment, because we're putting in new lows, we don't know that that is going to be the low. So what happens? What happens, guys? It could just stop you out and just completely carry on to the downside. Completely carry on to the downside. You don't know what's going to happen. So wait until you get back to this resistance, see how price reacts. If you get a breakthrough from the resistance level, that can become support. Once you get a break of support, then upside potential to the next resistance level is 47% on Polygon. Next on Cadena, guys, you need to be concerned about Cadena because we're just breaking a support level, 35 cents. We've got this major support between 37 and 42 on Cadena. We need to come back into this zone here. Need to come back into here. So over the next few weeks, guys, we need to be looking at Cadena and thinking, have we got any strength to pull back into this trend, or are the bears going to pull us down even further? I think Cadena is going to do well in the bull market, guys. It is high risk, small amount of capital in Cadena for me. Next resistance level sat 89 cents to 92 cents, and then you've got the big one up here, $1.70 to $1.75. Next one, H-bar. H-bar is at strong support at the moment. You've got strong support sat at 0.0125 to 0.0133. If we drop this level, we're coming all the way down to 8 cents. If we break this resistance point here, 0.168, this is the interesting thing for me on H-bar, because you've got a gap here, and that gap, what would happen, guys, is you get the opposite effect here, where you get a big move of 86% to the upside because there's little resistance there to create resistance points all the way. When you haven't created a base, when you haven't created a resistance point, when people are putting in sell orders, they're putting sporadic sell orders in, which weakens that level. We talk about diagonals and we talk about horizontals. When you think of a horizontal, guys, that's where someone's created a base, when someone's created a high, when someone's created a low. People are all looking at that base as support or resistance. So people put their sell orders in at that area, and it creates a consistent wall. When you hit that wall, that's where you get a rejection. That's why when you haven't got that wall and build up a price action, guys, you would get, for instance, on H-bar, for instance, you get sell orders here, you get sell orders here, you get sell orders here, and you get sell orders here, and you get sell orders here, all the way up to this resistance point. Now, if, for instance, you've got $1 million, as an example, you've got $1 million, and it breaks through, you've got the bulls that have got momentum, it's breaking through, the bears have got this resistance level, the bears have got this resistance level, the bears have got this resistance level and this resistance level. What it's done is it's spread the amount out, it's spread out the liquidity, so the bulls can fight through these levels a lot quicker. Now, if there was a build up of price action, say here, big build up of price action here, what that would do, it would allow people, because it's humans, or looking at the chart to say, right, we had a build up of price action there, expect a resistance point there. We're going to put our sell orders here. So if you've got the same amount of liquidity, putting a sell order in at a certain level, at a horizontal level, guys, that means you get the rejection, you get the rejection, you get the rejection, because it creates a sell wall at consistent level, rather than a sporadic level, which weakens it. So that was a long-winded way. I hope I explained that quite well, guys. But the next one we're going to be looking at is Cardano. So Cardano is something that I'm going to be doing a video on soon, because there's lots to talk about Cardano. There's a lot of people within the Cardano community here. So I'll do a video for you guys very shortly. We're coming back down to a strong support base here at 45 cents. This support base acted as resistance, and it acted as a range for 595 days, guys. That's a year and a half, nearly 2 years. So this expected to act as strong support. If we come back down to this level, guys, at 45 cents, that is going to be a good accumulation spot for me. To be fair, where price action is now, we're at 55 cents. It's a good accumulation spot. I don't expect Cardano to come back down in this range. If it does, if we get a black swan event, if we get a capitulation event, if we get some kind of uncertainty because something that Trump does, something that China does, something that Japan does, what you'll get is a wick to the downside and a big wick up and a big buy up, because all the buy orders are down here. Big buy orders and limit orders are already set down here just in case that happens. So we will talk about that more. GFI, we've got bear market low. This is what I'm concerned about, 30 cents to 37 cents. We're coming back down to test the bear market low. If you can get this for an accumulation point down here, small amounts at these levels, makes sense to me. If it drops down further, bang in, get to lower your average down. However, like I say, guys, that's high risk, just small amounts. You've got resistance sat up here now, guys, $1 to $1.14. $1 is going to be a psychological level to overcome. So again, you're waiting for a breakthrough of this resistance level for it to flip support. And once that flips support, you can look for the next resistance point. And then what does that allow? Say it time and time again, I will repeat myself. It allows for better risk, better reward, less risk. Remember, guys, you look after the risk, the reward will look after itself. Don't need to risk high, just have patience. Right, XCN. This is the thing that absolutely smashed the bullseye portfolio. I put like $50 into this and it went to about $3,000, guys, but it has pulled back significantly. And I can use a Fibonacci tool on this actually to find out exactly what levels are holding. So if we go from the low, you can see the 786 is holding now. 786, that's going to be the last ditch, because if we go down to the 886, that's pretty much coming all the way back down to the range. And guys, I've been absolutely battered as far as my portfolio is concerned. It is up overall, but I've been battered from the highs. More than 50, probably 60% to the downside. So guys, I feel your pain. This was one of the outperformers. I've dropped 86% on that. I'm still significantly up on that actually, guys. So that's one of the lucky ones. But that 786, guys, is holding support now at 0.08436 on XCN. Next one's going to be Flux, and we can see that we've just dropped this resistance level. Does it look like a good buy to me? Guys, a small accumulation level, What I call here, guys, is the pothole effect. And you'll see this happen time and time again before a market reset, where you're trading in a range, and then you drop the range, you get what I call the pothole effect, and then pulls back in before you continue to the upside. So potentially that could happen, guys. Does it mean it could go further down? It couldn't go further down. It could go further down. However, resistance is at 0.0315 to 0.039. Once you get back in this range, then you've got upside potential, 139% to the upside. Then final request was Chainlink. Chainlink's actually coming down to a strong support. It's actually had a big bounce off this strong support. It's had a reaction of this strong support, which is sitting at $10. So it's had a reaction at $10. It's come all the way here, guys. Do I expect this to come down back into this range where we'd had this accumulation phase? That's what I was talking about before, guys. When you've got an accumulation phase here, when this comes back down, this lasted for, this is exactly what I was talking about. So this lasted for 76 bars, 532 days. So we were rejected. Time and time again. Now, this is people putting in sell orders. This is people putting in buy orders. Bulls are winning here. Bears are winning here. What happens when you break through? You break through volatility, you come to the next resistance level, which was our 38.2% retracement. You come back down, guys, and this is the important thing. What was previous resistance, once you've broke through a volatility, comes back down and tests as support. And that's what we're doing now for the second time, guys. We're testing support. and we've got strong buy orders at this point here, and you can tell we've got strong buy orders. So anywhere between $8.74 and $9.91 looks like a strong accumulation for me. Right, okay, guys, get yourself on the Discord. Why should you get yourself on the Discord? Firstly, we get inspiration every single morning from Paul. So that builds us up in the morning, guys. We've got lots of alpha going on there, but it's more of a hangout than anything else. We do talk about charts, we talk about price action, we talk about portfolio diversification. But it's a place where you can chuck me your chart requests, guys. On YouTube, I've taken off all of my comments, and I'll release the good ones, I'll release the bad ones, and I won't release the spam. Guys, that is a mammoth task because I have to go through to get one good one and one bad one. I have to go through about 100 spam. So I've taken them out just to protect you guys. And the best place that you can ask for requests is going to be on the Discord group. So I don't always get to see, guys, your comments in the YouTube. I try and comment to as many as possible, but I don't always get to see them because of all the spam that I have to filter through. But if you get yourself on the Discord group, which is completely free, you can put your chart requests on there, and I'll do that for the following video. I think that's about it from me for now, guys. Other than we've got Tangem. Tangem, I've got 15% off on this, guys. So it's $59.40 for this winter edition. This is a limited edition. That's the best one at the moment because the rest of them are $69.90. So you get 15% off that, guys. And then when you use the bullseye discount, you get an extra 10% off that. So that's an extra $5.94 that you'll get off that. So even cheaper, guys. So you get it for less than $55 for the 3-card set and protect your crypto with the 3 cards. That's about it from me for now, guys. Let me know in the comments what you want me to cover next. I'll try and filter through all your comments, and I'll see you in the next one.